Have you ever wondered which assets are making people rich? What you might be surprised to learn, is that most wealthy people aren't sitting on piles of stocks and real estate, although those do still figure prominently in their portfolios. Rather, some of the most common investments that make wealthy people even wealthier are actually hidden assets most of us never consider. Take a look at these 10 assets that are making people rich and find out if they could work for you as well. Watch until the end for bonus investment ideas that can make you even richer. 1. CD ladder. A CD ladder is an investment strategy that involves buying different CDs with varying lengths and interest rates. When one CD matures, the investor uses that money to buy a new CD to be put on the ladder. If a person wants to achieve their goal of having, say, $25,000 saved in 10 years by investing $2,000 per year for those 10 years, then this person could set up a CD ladder with 5 CDs, each maturing after 2 years, and could make their deposit each year. In the first year, they would have one CD maturing worth $2,000, in the second year, they would have 2 CDs worth $4,000 each maturing, and so on until the 5th year when they would have 5 CDs worth $10,000 each. The other advantage of a CD ladder is that it can help people who are saving for retirement or some other long-term goal. The idea behind the CD ladder is to take advantage of compounding interest, a concept where you earn interest not only on your original amount but also on any interest you've already earned, and steadily increase your savings over time without adding too much risk. 2. Index fund. Index funds are an easy way to invest in a diversified portfolio of stocks, bonds, and other securities that can provide both stability and growth potential. Though they lack the returns of individual stocks, they make up for it by charging lower fees. And some studies have shown index funds to outperform managed funds over the long term. Index funds are still going to be one of the cheapest ways you can invest, said Todd Povich, President and CEO of Povich Asset Management Group. But I would suggest there's no single investment vehicle where you should put all your money. If you want to build wealth, I think investing is the answer, he said. But what investments you choose depends on your appetite for risk. Some common types of investments are retirement accounts like 401k, or Roth IRAs, annuities, certificates of deposit, mutual funds, life insurance policies, Treasury inflation-protected securities, TIPS, municipal bonds, U.S. Treasury bills. 3. Backdoor Roth IRA. The Backdoor Roth IRA is a little-known wealth-building tool that you might not know about, but the benefits are worth looking into. If you work for a company and have extra money you want to put away, this could be the option for you. With most traditional IRAs, your contributions are not deductible on your taxes when made. With the Backdoor Roth IRA, you get all of the advantages of a Roth IRA with none of the tax drawbacks. It's also easier to withdraw funds in case of an emergency. Plus, there are no income limits or time restrictions like there would be with other types of retirement accounts. A small downside to the account is that you can only contribute $5,500 each year. But if you're able to max out your contribution every year, then it will add up significantly over time. 4. Use a solo 401k. There are a lot of 401ks out there, and a lot of people wondering which one to go with. Well, there's one that you might not know about yet but that you should consider. The solo 401k is an option for self-employed individuals who want to start saving for retirement right away. The maximum contribution is $20,500 in 2022, $19,500 in 2020 and 2021, or $27,000 in 2022, $26,000 in 2020 and 2021. Total contributions to a participant's account, not counting catch-up contributions for those age 50 and over, cannot exceed $61,000 for 2022, $57,000 for 2020, $58,000 for 2021. A solo 401k can be set up as either an individual or as a sole proprietorship. And just like other types of 401ks, contributions made to a solo 401k can be used to reduce your taxable income for the year. Any contributions you make, including profit sharing, are tax deductible. And don't worry, even if your business fails, the money in your account will still be yours because it is secured by US bankruptcy law. Plus, there's no administrative cost on top of that. 5. Taxable brokerage account. These types of brokerage accounts are typically invested in publicly traded securities. The most common types of taxable brokerage accounts are individual retirement accounts, IRAs, and 401ks. Other types of taxable brokerage accounts include mutual funds, KEO plans, and other retirement savings plans. A taxable brokerage account is usually a safe place to keep your money because the broker-dealer holding your assets provides federal insurance coverage for up to $500,000. But unlike an IRA or 401k, this type of account doesn't provide you with any tax breaks for the contributions you make. Your earnings from investments will be taxed at regular income rates. That's why it's important to pay attention to what you're investing in when using a taxable brokerage account. Dividends may be taxed at different rates than interest income. 6. Real estate. Commercial property is another major asset class to include in your investment portfolio. The stock market may have yielded some huge returns in the last year, but these have been tenuous and uncertain, especially with so many international complications like Brexit. That's why a stable, blue-chip investment like commercial real estate is worth looking into. And while you're at it, consider alternative investments as well. These can be low-risk alternatives that yield high interest rates without being too risky or volatile. It's not just about stocks and bonds, there are plenty of other assets out there that will help you generate income without exposing you to undue risk. And the sooner you start diversifying your assets and investing wisely, the better off you'll be. You might also want to look into long-term investment strategies, such as Lending Club, which offers passive income and an average annual return of 5% over 10 years. Who knows? You might be making millionaires next year. 7. Bonds. Bonds are a type of debt investment in which an investor loans money to a corporation or government entity in exchange for interest payments. The term can also refer to interest-bearing securities in general or any type of instrument that performs similarly over time. There are many different types of bonds, which can have some similarities, but each has unique features and risks. Corporate bonds may be rated by major credit rating agencies like Moody's or Standard & Poor's and can provide higher returns than other investments with similar levels of risk. Municipal bonds often provide tax advantages to investors who reside in the same state as the issuer and may provide a steady income from either tax-free interest or tax-exempt income. Government securities are backed by the full faith and credit of the US government. Treasury bills, T-bills, mature in 1 year or less and offer a convenient way to buy low-risk securities while providing regular income. Treasury notes, T-notes, typically mature in more than 1 year, but less than 10 years. Both T-bills and T-notes pay interest every 6 months. A treasury bond is issued at maturity when it reaches its 10th year maturity date and pays interest every 6 months until it matures at 20 years old. 8. Stocks. Mutual funds and index funds allow for a passive way to build wealth. In the US, index fund investments account for 2/3 of all assets invested in US equity markets, growing over 50% since 2003. Index funds outperform actively managed mutual funds and investment returns are more predictable with lower risk. Some popular index funds include the S&P 500, Russell 2000, Dow Jones Industrial Average, and MSCI, EAFE indexes. Minimum initial investment is required and can be as low as $250 depending on the fund. ETFs are an alternative to index funds. ETFs provide similar features but differ by allowing traders to trade individual stocks within the index or basket of stocks that they track. Like stocks, ETFs can be bought through a broker, an online trading platform, or directly from an exchange such as American Stock Exchange, AMEX, or NYSE Euronext. 9. Equipment. Learning how to start a new business from conception to execution. One key part of this process is to have equipment that will help you build and grow your company. Think about what kinds of tools, equipment, and materials you'll need now or in the future. Some questions to ask yourself are: do I need a website? How will I handle sales? What software programs do I need for my computer? Will this be a home-based business, or will I work out of an office? Do I need an accounting program? An inventory management system? These decisions can make a big difference in how successful your business becomes. Research which types of supplies and equipment are right for you, then take steps to buy them so they're available when you're ready to launch. 10. Patent. One asset that people often overlook when it comes to increasing their wealth is a patent. Patents protect your idea and allow you to profit from them, which can help increase your wealth. A patent is considered a type of intellectual property and provides the owner with a monopoly on its use or sale. If another company starts using your idea, then they will have violated your patent rights, which could result in legal action against them, including the payment of monetary damages. That's not all though. Not only do patents grant the holder exclusive rights to an invention for a limited time period, but patents also provide some degree of protection against others who would steal your invention and market it as their own. Patent infringement cases are complicated and expensive for both parties involved, so most companies prefer to avoid patent infringement by working out licensing agreements with patent holders. In these agreements, the patent holder agrees to license their product or process exclusively to one company in exchange for a royalty fee. These royalties usually range from 3% to 10% of total sales. In 2012, Apple was accused of infringing on 5 different patents owned by Google's Motorola Mobility Unit during the production of the iPhone 4S handset and iPad 2 tablet computer. After litigation ensued, Apple agreed to pay $1 billion to purchase those patents from Motorola Mobility in order to settle the case. Some other valuable types of intellectual property include trademarks and copyrights. The latter protects creative works such as books, music, paintings, drawings, and photographs, while trademarks protect words and symbols used by businesses to distinguish themselves from competitors. Bonus number 1. Information. The world of personal finance is an ocean filled with unknowns and difficult to navigate. However, this doesn't mean you can't learn a thing or two. This post explores some lesser known ways to build wealth that often get overlooked. 1. Land. One of the simplest ways to invest in real estate is by buying land. Some people choose to buy a raw land and wait for it to appreciate before selling it at a profit. Others will buy plots of farmland in less populated areas so they can develop into high-density residential developments. 2. Patents. A patent is a protection for an invention from unauthorized use for up to 20 years, as long as you pay maintenance fees on time. A patent grants ownership rights over something new and unique, which may prove lucrative if your invention takes off like Apple's iPhone did when it was first released in 2007. 3. Startups. Investing in startups has become easier than ever, thanks to crowdfunding platforms such as Kickstarter. While crowdfunding carries its own risks, there are plenty of success stories out there for those who take the leap. 4. Bitcoin. Bitcoin is one way to diversify your portfolio and hedge against inflation, since Bitcoin prices are only based on supply and demand. Bonus number 2. Unique rights. 1. User-generated content. There are plenty of ways to harness the power of user-generated content, from giving users a cash incentive for promoting your company through social media, to leveraging influencers for marketing on your behalf. But as competition for ad dollars becomes more cutthroat and digital trends evolve, this could be an opportunity worth exploring. 2. Contests. One way to capitalize on your customers' creativity is by holding contests that give them the chance to win something valuable in exchange for their work. You can also host giveaways that encourage others to share their creations with you. 3. Limited edition products. Another clever strategy is releasing limited edition products that only last for a short time before being taken off the market, thereby increasing demand for them among collectors who want something special that they can add to their collection. 4. Creating a subscription service. Some entrepreneurs go one step further and create subscription services for collectibles. For example, Birchbox offers subscribers monthly boxes of beauty samples delivered right to their doorsteps. 5. Music licensing. Music licensing is another avenue to explore if you're trying to think outside the box. There's a whole universe of different music that's not owned by major labels or even TV shows anymore. 6. Trademark protection. Although it doesn't offer any income generation potential, trademark protection is necessary to avoid infringing on someone else's copyright. It's usually easier than copyright protection because you don't have to show how your use will cause confusion. 7. Crowdfunding. Just because crowdfunding has been around for a while doesn't mean it should be overlooked when considering new opportunities. 8. Merchandise sales. The most lucrative type of merchandising deal involve exclusive rights to sell branded merchandise in return for royalties paid per unit sold. Such agreements typically span 5 years and include tiered payments, meaning higher rates paid at certain thresholds based on volume and profit margin goals. In concluding, there are many different ways to build wealth, so it's important that you do what works for you. For example, in the United States, real estate has historically been one of the best long-term investment vehicles. In contrast, in Japan, there is a cultural preference for life insurance. The point is that this doesn't matter. What matters is finding out what does work for you, and doing it. As Warren Buffett once said, rule number 1, never lose money. Rule number 2, never forget rule number 1. Thank you for watching this video. If you got this far, and the video was of value, please click the like and subscribe buttons, so that you do not miss any future videos.